Hey everyone, welcome to Live Trading Thursday. My name is David. It's another day that we're going to go look in the market here. We're going to have a little bit of a shorter session today. I know usually we're kind of creeping up on the half-hour mark, but today got to keep it at 15 minutes. So we're just going to jump right in. You guys have heard the spiel already. You know what to do. So here we go. Let's rock and roll. I'm going to share my screen right. Oh no. Add to there it is. Okay. Woo. Close one there. Here we go. Here's the market. Up at resistance. Since we talked last time, just kind of move sideways, right? A little bit of sideways action and then pop up yesterday. And today we were above that line and right at this line. This is kind of cool, right? This is why I like technical analysis sometimes. It's almost like we predicted this, but it's just how technical analysis works, right? So here we are. It popped up. We're at resistance. What's going to happen next? Are we going to break through resistance and continue upward? Or are we going to move back down? Are we kind of starting to roll a little bit? Couple things to think about. We're at resistance. It hasn't really, tipped its hand yet as to what are we going to do. So I think the best thing that we can do now is just come up with a plan. Maybe we have a few bullish stocks ready to go. We have a few bearish stocks ready to go so that when the market does show which direction it wants to go, maybe we can just hop on board with that direction with the plan that we had in place. So just a couple things to think about. But while you guys are putting in some tickers for us to look at, I want to look at a few trades that we had put on previously. Okay, so we're going to look at a few things. I'm coming down in. You know what? Let me change something real quick here. Oops, that's not it. Stand by while I play with the buttons. Okay, here we go. I wanted you to see what button I'm clicking on here. See right here, it says TRADEway paper trading account. You can have multiple accounts right here, right? And so in the TRADEway paper trading account, we had done a trade on Tesla. If you guys remember that, I think that was a couple weeks ago. I didn't get a chance to show the results to you last week because we had a lot of good questions. But essentially, when you look at it, we had a bear call credit spread, and it was something like this. Structure something like that. I was about to say raise your hand if you remember that, but I don't think you guys have raise hand buttons on here. But I believe most of you guys remember this because we had structured this. It looked pretty good. It was kind of bearish to sideways. Stock had been below the 10-day the whole time, and we got in that paper trade. Well, the very next day, guess what happened? Right? It happens. It popped up here. It popped up and it crossed our short strike. And I got out of the trade. Actually, I was able to watch it in time. I don't always get the opportunity to manage our paper trades that we put on together in time. So I got out of the position, and that's just part of it, right? That's what happens. Yeah, we took a bit of an expense. How much of an expense? Let's look at the journal. Paper train count. Let's see. Tesla. Here we go. Bear call. It was a smaller one, $110 expense, right? It was a small position, and we got out of it early, and we didn't let it go too far in the money before we got out, right? So that's a very reasonable expense. Now, I bring this up because there are several things I want to show you, right? One could look at a few days later like, oh, but it's out of the money again. So maybe we shouldn't have gotten out. No, we should have gotten out because that was our plan. If we hadn't gotten out, look at this. Look how choppy this is, like just coming in the money, out of the money, in the money, out of the money, in the money, out of the money, in the money again. It's all over the place, right? Can you imagine what that emotional roller coaster would be like? And then still at this point right now, we'd be in the money. It'd be a much heavier expense if we took it today, right now, than if I had taken it when I did the very next day. Does that hurt psychologically to take a trade-off at an expense that you put on just the day before? Yeah, it does, but less so than if we broke our rules and stayed in through here. Anyway, that little spiel is over, but I want to bring that up because it's such a valuable coaching lesson, guys. It really is. But let's look at a couple other trades real quick that I don't remember if we'd put these on in this webinar or a different one, but we're going to look at them anyway because they're great to look at. Let's look at BXP. BXP is a paper trade I have on, and it's a similar idea, right? So stock 20 days kind of acting as some resistance on this day, got into that trade. I think that was in here that we got in to this paper trade. Next day, again, don't like what happened next day, but it did not cross our short strike. It was really close, but it didn't. Thankfully, this resistance line held and the stock rolled back down. And look where we are now. We're really close to expiration. Actually, this thing expires tomorrow. We've got a ton of cushion, multiple protection lines. This guy is looking really good to just leave on the table for a max profit on that credit spread. So that's pretty awesome right there. Let's look at one more here. Wow, no, was it MRO? Yeah, MRO. Okay, MRO. Another bear call credit spread again. Looking at this downtrending resistance line, put it on. Still got a long ways to go, right? 24 by 25, still got a long ways to go, but the 20-day acting as some nice resistance. Now, the part I don't like is, my downtrending resistance line kind of got broken, so I don't like that. But the trade has, moved sideways in the time that we've been in it, so it's already probably profited some just on time decay, and it hasn't broken the 20-day. The 20-day, that would really be my not my line in the sand yet. I'd either use the short strike or the 50 days my line in the sand, but the 20-day would kind of be my warning sign. If that gets broken to the upside, keep an eye on it. But as long as we're below that 20-day, I'm still feeling really good about this trade right here, this paper trade that we're in. So I just want to look at those with you guys real quick. All right, awesome. Looking at Benjamin loaded us up. PRI. Okay, we're going to hit these quickly here. PRI, Primerica. Okay, here we go. This is one. Remember what I said at the beginning? Let's keep some in mind for bullish and some for bearish, just so that we have something to work with when we know which direction the market might want to go. This could be one to put on that bearish list. We've got the earnings behind us. You can see is bottom left to the top right of our screen. Where are we right now? It might not be at a great buy point. Love to see it come back and then bounce up off the 20. Right, 20 has been some support right in here. With support there as well. Little drop below there. That could have been some actually, I don't know what that was. I was going to say earnings related, but that's a couple days before earnings. So anyways, it'd be nice to get a bounce up off the 20 on Primerica. That would be my favorite. And then for a profit target, I'm looking at probably the 192 range. I'm generally not going to say, what's the top of that wick? I'm going to go 195.56. No, I'm not going to do that. I want to be a little more conservative, right? My trading lines should be a little bit below resistance. So if we get in with a bounce off the 20, then maybe I'm looking for maybe a 5% move up to 191, 192, somewhere there. That's what I'd be looking at. Tesla. We just looked at that one. We can look at that again. What is it doing now? Whoa. That's the wrong one. What is that? I just typed it wrong. Let's just click on this. Okay, so Tesla, I put this uptrending support line on here, and I'm already taking it off, right? It's kind of choppy. Could we structure potentially a bear call below the 50? I'm sorry, above the 50-day, looking at the 50-day as some resistance. We could if it rolls down on us. But you could do that, but you want to be quick to stop out if necessary. I'll give you guys a big screen again. There you go. You want to be quick to stop out if needed, just like I did when the bear call was structured right here. So Tesla not making the prettiest patterns at the moment, but see what it might want to do. If it continues up and comes back down, then potentially you might have an uptrending support line there. So see if it does that onto the upside, or see if it rolls down to the downside. A couple different ways this guy could go. Apple. All right, Apple, looking at a nice pattern, right? This little it was steeper, and then it kind of shallowed out. But since it shallowed out, it's been using this line pretty nice. Now, a little more up at resistance here, right? I kind of want to see it move back down. Maybe it gets steeper. I don't know. Keep an eye on that 20-day too, right? The 20-day could be a nice bouncer, but there's just something really beautiful about the pattern. And look at the EMAs. I wonder if I can. Let's try something real quick, guys. Chart. I don't know if I'm gonna be able to do this. I want to hide the candlesticks real quick. Oh yeah, there we go. Sweet. Look at this. Okay, this is kind of cool. I haven't done this in a teaching thing yet. I might pull this out later on today, actually. Look at how beautiful that EMA action is, right? The 5 is above the 10, above the 20, above the 50. The 5 touches the 10 and bounces up. It's doing that so consistently because the price action is so consistent. That's cool. That's super cool. All right, let's get our candlesticks back. There you have it. So Benjamin, this is a great one to look at for bullish trades. Is it at a perfect buy point right now? Mhm. Not perfect, you know. What if it can come back down to the 20-day? And if it does come back down to the 20-day and show to bounce, maybe I'm actually looking at a straight call, right? I might not want to do if I had to get if you twist my arm and get into a trade today on this, I'm going to do a credit spread because it's not a perfect buy point. But yesterday, maybe if I see that wick and it coming up again off that 20-day, close to that 20-day, I might do a straight call, right? Right. So that was a cool one to look at. ADP. ADP. You know, we've looked at a couple of these. It was pretty bearish, starting to flatten out, right? If I ask the question, what strategy do you think I'd reach for in here? You could probably answer that for me. I'm looking at the bear call credit spread, right? The bear call credit spread. We're not going to look at all the strikes right now, but if you structure something, ooh, that's really wide. Maybe a $5 wide. You structure something like that with maybe a June 16th expiration, get the short strike at least beyond the 50-day. But frankly, I'd like it even. What if you could get it up here? I don't know, but what if you could do 225 by 230? You may not get much money for that, but if you could, that would be sweet. Even the 220 by 225 probably be okay. It'd be nicer if it could pull up and then roll back down again, right? Again, not the best buy point, or entry point, I should say. Hood, let's take a look at Robin Hood. This guy was in a nice rolling pattern, right? Look at this. Just trading in this range, right? So nice range trading. The one thing I didn't like, it didn't make it up to that resistance again. It fell short there, but it kind of did that here. So you almost have like two resistance lines in a way. You could put a line across right around there. So, where is it today? It's at support, bouncing up off of support. This could be a good entry right now. We don't always find those on these sessions, right? We don't always find those on these sessions. We're like, could this be a good entry right now? Yeah, it could be a good entry right now. You could do a step 1, you could do a step 2, you could do a step 3, step 4, whichever you like best, what works best for you, right? Now, what's the profit target? I'm conservative on profit targets. Not going to lie, I am. I'm looking at this 200 simple moving average, and that's where we got to last time, and only on a wick. So I'm looking inside of that, maybe like $9.60, right? Now that's not much that it can move, right? We're at about almost 860 right now, but I mean that's a dollar move on an 850 stock. So that's what, 12% or so. That's pretty decent, right? You can do some things with that. Look at the options. I think they're okay. They're on the bottom end of the green for liquidity. So they're okay. Just double check, make sure your options are good on those. But good one to look at there. GameStop. Okay. All right. Some interesting price action here. Down and up. It's not in a stable pattern, I would say, right now. Zoom out a little bit. It was in more stable pattern. This earnings, it went up, came down, found some support there, moved up again. That support was kind of cool because it went along with the wick right there, so kind of filled the gap, and then just bounced up, and it's been pretty hot since, right? I mean, going from close to $18 to $23. That's a $5 move. That's a lot of math right now, but that's a really nice move up. Only one down day within that little run up there. Um, Pretty hot out. You wouldn't you get you gotta have it move back, right? It's got to come back down. And keep an eye on the 200 simple because what did it do after earnings when it gapped up? Actually, gapped up to here. It gapped up to the 200 and fell down, right? Gapped up to the 200 simple and fell down. We're coming up on the 200. Now, if it can bounce down, I'm sorry, if it can come back down and bounce up off an EMA, you could catch a little move. But I wouldn't expect it to go higher than 200 right now. This is a lot of move up in the last 3 weeks. I expect it to come back down some first before we try and go break the 200 there. All right, last one we're going to look at today, XELA. Okay. And that one's that. I don't know what to do with this, guys. Okay. Let's try this. All right, so I zoomed in. I'm going to zoom in again. Obviously, this one there's some crazy things going on in here. Actually, let me look at this is a weekly chart, a 3-year weekly chart, and it's done some crazy things. I don't know much about this. This is what is the average volume? The volume is still 2.5 million. Okay, generally when a chart looks like that initially, I'm already not interested, right? So kind of crazy stuff going on here. But as we zoomed in here, you can see using the 50-day has bounces down. 20 days also acting as some resistance. The options are terrible on it. Liquidity is awful. So you can't do anything bullish with this, right? It'd be bearish if anything. And frankly, the oh, that's a split right there. 1 for 200. Okay. So just split recently. Maybe that's what you were looking at, Benjamin, right there. Too much volatility. There's too much stuff going on in this one, right? If you unadjust the split, then that's what that looks like. It's just been coming down. The options are no good. It just had a split, a lot of volatility going on. I'd put this guy aside. Maybe if you want to look at this guy, maybe come back in a couple months to this one. So, yeah. It's actually, Benjamin, is actually a 1 for 200, right? Not a 200 to 1. It's a 1 for 200 split there. So, yeah, a little different than what we usually see. But Benjamin, I really appreciate you bringing up all those tickers. We looked at some good ones there. We really did. Man, if you keep bringing up tickers like that, I don't even think I have to do homework for this webinar anymore. Don't worry, guys. I'll do it just in case he misses. But hey, want to bring up, I mentioned this last time, guys. We got the Trading Jumpstart Challenge. And that's going to be taking place next week. I'm going to be on 3 of those sessions next week, Monday, Wednesday, and Friday. So got those links in there for you. Guys, if you're newer to trading or if you've taken a big break and you just want to get back going, right? This literally is a jump start. Think about your car that's not running. It could run, but it's just not going. It just needs a little help. You just jumpstart that thing, and then you're off and running again. That's what we want to do for your trading journey, right? So if you're not going yet, or if you haven't been going a while, we want to get you going again. So check out that link and join us for that next week. That'll be Monday through Friday, 2 to 3 hours each day of some good coaching and some good material we're going to be going through. So I just want to make you guys aware of that. All right, guys, that's going to wrap it up for today. Thanks for being on again, and we'll see you guys next week.